Good morning. Not much of a crowd today. I was going to go through the presentation, but I don't really think there's not really that many people here to benefit from the presentation. So I might just go straight into a little bit about Vast Resources. It's a multi-commodity, multi-jurisdictional mining company, both in Romania and in Zimbabwe. It's gone through a bit of a shake-up and turmoil over the last 6 months. But what we've decided to do of late is to then refocus on our core assets that are going to be near-term income producing. What I find quite strange about AIM is that people forget it's the alternative investment market, which is there to find ways and means of junior miners and explorers to get money to be able to implement operations into mining and producing assets. And where Vast sits, which I think is quite fundamentally different from most mining companies, is that we're sitting on assets most people are still looking for. And the priority for the company at the moment is not to go looking for raise money to look for new assets that don't exist, or we know they may exist or may not exist. We actually have those assets in our portfolio that people dream for. This actual auditorium is full of people that are now looking for money to go exploring, to look for assets to try and prove something up that Vast already has in its portfolio. So I find it quite ironic that we're sitting where we are today as a company. However, there is good news. We are sitting on two very, very near-term assets, one being the Băița Ply mine in Romania, which has over $60 million of infrastructure in there that only needs about $3.5 million to get into complete production in very near term. A lot of the preliminary work's already been undertaken at the mine, and we're looking forward to reopening that very soon. Of that, we've got a 6% copper grade on average, or 10 gram a tonne, as some people like to refer to it, depending if you're a copper or a gold person, which has infrastructure going back from 1947. We've got 3 shafts, we've got open stopes, which I'll actually skip to if you don't mind. If you look at this slide here, in the underground in Băița, as we stand at the moment, we've got almost 2 years' worth of production that was already pre-prepared back in 2014, and the development for the next 3-4 years of mining at a high grade of copper, lead, silver, zinc, gold and silver. So they're quite unusual assets for a mining company. The unfortunate part for us, which is also to our advantage, is that we're sitting in 2 very difficult jurisdictions, being Romania and Zimbabwe. Romania historically has been a mining country for over 2,000 years. The Romans settled there specifically for their thermal springs and their gold. And if you go into the museums, the Gold Museum in Rome, you'll actually see that most of it consists of Romanian gold. So, I'll go back a little bit further and start from the beginning. Yeah. Băița Ply is quite an interesting mine. It's sitting in what they call a skarn deposit. As I said, it was been mined from 1947 to 2014, and due to EU accession, most of the mining infrastructure was shut down in Romania, and Băița was one of the very few mines that remained. It's a high-grade copper mine that is sitting in a very highly unexplored area in modern terms. Although there's probably over 25-30 kilometres of underground exploration tunnels that sit around our existing mine, and where we're sitting on our level 17 and 18, as I said, we've got 2 years worth of production just sitting there ready to go, and there's drilling results going down to level 21, which takes it to about 15 years of 1.8 million tonnes in resource, but there's still potential to go north, south, east and west of the current infrastructure to increase that resource as well. And that's something that we plan to do once we get underground. So we've had a few difficulties as a result of our off-taker not providing finance in December last year and January this year. And we're going through a current restructuring phase within the company, which will see the company, let's say, rebooted. And I spoke to one of our shareholders this morning trying to explain what this means as far as the restructuring is concerned. And it's not what people have alluded to. It's more a matter of taking the worst house on the best street that's sitting there ready for being condemned and rebuilding it from the foundations up. This entitles very, very little equity to bring in what we consider to be 2 world-class assets, that being Băița and of course the diamond concession, which the Minister of Mines in Zimbabwe had confirmed at the Zimbabwe Mining Indaba last week, that Vast is one of only 4 companies that will be allowed to mine diamonds in Zimbabwe. So the refocus of the group is to sit there and say, how do we restructure the group to give a clean balance sheet to enable people to invest in the company? Because historically, if you look at our balance sheet, we had $60 million worth of assets, $48 million worth of debt, which makes it very difficult for institutional investment. So what was announced last week was actually to say, what are we doing as far as our restructuring is concerned, that is predominantly focused on reorganising the balance sheet and cleaning house of all debt and trying to restart the company as a clean and efficient business that is investable by institutional investors as well as private investors, and to create value for the company that it well deserves. As I said, 2 world-class assets in very, very near-term production that take very little money to get into production, that will be able to add value to shareholders and attract proper institutional investment and debt providers, which is what's been lacking in the past from the company. When I took over the company last year about this time, a little bit earlier, it was quite obvious that things needed to change, and we spent the last 12 months looking at the company, reassessing the business and how to re-establish the company as not just an explorer as it was historically from 2005 to 2015, but most importantly how to add value and bring in near-term production and profitability to our shareholders. So I think we've had a re-rate downwards due to the fact that some of you may or may not know that we were unfortunate enough to be caught in the storm of our offtake prepayment finance agreement, whereby we were not able to draw down on the $5.5 million that was promised to us from Mercuria. So we've spent the last 4 months reassessing that. And what we have established during that period, which is the most important thing, is why has it been difficult for the company to attract proper institutional money? And it all fell back to the balance sheet. And so what we've done is now we've taken a new stance on how we're going to reapproach the company and clean the balance sheet, and that will be happening very soon, and that's what the restructuring means. Not so much as people have been speculating in the market the last couple of weeks. So I've talked a little bit too much about that. I've also spoken about our wonderful Baitsa mine, so I'll just continue on from there. Most of this is already available on our website for people to understand. But what I would like to really talk about is which I think is the main focus of the company at the moment, because people understand what's required of Baitsa, and we also know what we need to do and what we've been doing and implementing, and work is ongoing on the ground. So we're not just sitting idly by. We're actually working on Baitsa and waiting for the new finance to come through, which will allow us to open it in the very near term. As I said, it is prepared. It's been on care and maintenance since 2014. It's prepared underground, which is one of the greatest long-term lead items for a mine. So it's really just a matter of upgrading certain items such as locomotives and mining equipment, but all the installed capacity is there for 22,500 tonnes a month. The haulage capacity is 16,000 tonnes a month. The mills are in place, the crushers are in place. There's very little to get going again, so we hope to be able to see that operational in the very near future. But I would like to focus a lot on the attention of the alluvial diamond mines in Zimbabwe. The history of Vast Resources is African Consolidated Resources in 2005 that actually in 2006 discovered the Marangi diamond fields and unfortunately lost them due to the previous regime. And the company had been trying for over 10 years or 12 years to actually get them back. During the last 7 months after the change in the Zimbabwean government, we've decided to take a different approach, which has worked for us, which is working together with community to create a community-focused project, which was very well received, and which is why we've been named as one of the only 4 companies to be able to mine in Zimbabwe and the only publicly listed company to be able to do so. And we're very proud of that. That's been through the hard work and dedication of our team on the ground. It's not something I can take credit for. It's something that goes directly to the management team in Zimbabwe that we picked last year. And we're very proud to say that we look forward to finalising the final joint venture agreement soon. Unfortunately, we've had a cyclone that's hit the region over the last week, which has delayed the official signatures. But we are in constant dialogue with government and community, and we hope to bring that to the market very soon. But I was very fortunate enough to have Minister Chitando speak about us last week at the Zimbabwe Mining Indaba in South Africa, so I'm allowed to talk about it today. This is quite an interesting field. It was a diamond field that was always knew we were there. It was part of the heritage concession that was given by President Mugabe to the Chiadzwa community, and it was virtually untouched, although it sits on an area that historically had between 100 and 200 carats per 100 tonnes in the alluvials, within the gravels. And as you can see by this next slide, it's actually quite a simple process. The gravels sit between 5 and 25 metres deep. It's over an area of 15,000 hectares. We've been allocated a 7,000 hectare area, which may or may not be expanded. That should be part of the final negotiation on the joint venture. But alluvial mining is actually quite a straightforward and simple operation with quite a considerably low capex cost to near-term production. And it basically entails a feeder system where you actually bulk feed it into the feeder system, then goes into a scrubber, screener and washer, and from there it goes through a sorter, into a DMS or an XRT plant, and straight into a sort box. So it's a fairly simple process. And this process we're looking at working somewhere between 50 and 150 tonnes an hour as a start-up project, which at 100 carats per 100 tonnes will produce somewhere around 87,500 carats per month, which is quite a considerable amount when you consider that historically in the former geological reports that we're sitting between 10 and 15% gem. That brings, and I'm only quoting historical public figures, not our own internal, because I'm forbidden from doing so, somewhere between $85 and $100 per carat. So based on $100 per carat and 87,500 carats per tonne, it's somewhere around an $8.75 million turnover at the low-grade end. Historically, in the area, on the XRT sorting, if you go back to the ZCTC and Alrosa, who have worked in the area, they're working on a production cost of between $25 and $28 a tonne. So you're talking about a business that has the potential of making around between 50 and 200% margin, depending on how you want to look at it. And as I said, I'm forbidden from giving any specific figures, but I'll let you do the maths. And in time, once we've got the joint venture agreement, we'll provide a desktop feasibility to our investors. So you can understand why VAST is now sitting and saying, look, we're going to consolidate our interest back into near-term production, that being the Baitsa and the the Baitsa and the alluvial diamond fields. Manaila, as our historic claim, was always there as a proof of concept, which did its job. We managed to get the Baitsa license. We've got the Zagra drilling process, which is actually quite a phenomenal asset. So I'll skip to Manaila. Sorry. I've lost Zagra. Any particular reason why? So it's not on the slideshow. It is? My apologies. I'm sorry, part of the Romanian expansion. My apologies. Part of the portfolio of investment that we've focused on, and if you have a look at the stand, you'll understand that Romania sits on a polymetallic belt with about 170 kilometre strike, which goes from the northeastern corner of Romania to the northwestern corner of Romania. This has been historically mined, as I said, since Roman times. So we're very lucky that we've managed to pick up brownfield sites. In 1989, this particular area, which we call Zagra, Piciorul Zimbru, Nagura Negra, which we now call the Zagra field, is actually an area that was a Remin exploration area, where they explored the area from 1972 to 1989. And in that time, they came up with a 3 billion tonne resource of 0.9% copper, 1.4 zinc, 1.2 lead, and quite high gold and silver as well. All of those historical data has been made available to us, and we've recently completed our drilling program, which is only about 3,600 metres of drilling to get an established resource to enable us to go into an exploration licence. Those samples are now at ALS waiting for final results, but all we need to do is make sure that it's consistent with the historical reports. as of 1989, they had established there was over 3 billion tonnes of ore in there, and in 1989, 10% of that was economically viable. And putting that into context, we're talking about when copper was sub 1,000 and gold was around $300 an ounce. So if you put that into today's terms, we'll probably find that more than 50% of that at least would be economically viable, which would constitute that as potentially being one of the largest copper mines in Europe, if not in the world. So that is it's a medium-term focus for the company. It's something that we managed to enter into with virtually no cost. We've outsourced the costs of the drilling program itself with local partners that will earn into the program. So there's been a little bit of criticism of the management about trying to spread ourselves too thin. But all of the projects we've embarked on over the period of the last 12 months have been at virtually zero or little cost to the company itself. And we've outsourced most of the IP, so therefore we haven't had to take up management time and we haven't used any of the company's money. So our philosophy was that regardless of what we wanted to do with a mine of this size as a junior mining company, we would always need a big brother on board. So rather than waste resources and financial capacity of the company, we went out to local partners who have the drilling capacity and the geological capacity to assist us, to give them a little bit of piece of the pie, to enhance its value, to then be able to work with the major players to take this mine into fruition in the future. But this will be based on a more traditional type mining concept of finalising the DFS, then into a BFS, then into a pre-feasibility, and probably take it out to a major institution or major mining company, because it is far too big for a company like Vast to manage on its own. We have the IP of Romanian mining, and we will leverage off that, but try to do so without jeopardising the company's more short-term assets that are rather high income producing in the near term. I will then move to Blueberry. So Blueberry is a project that is sitting in the Golden Quadrangle of Romania, where places like Eurosun and Roșia Montană sit. Historically, in the Baia de Arieș region, which Blueberry actually encompasses, it was the highest gold producer. It was the highest gold producer in Romania. I'm not quite sure of the statistics, I should know it, but it accounted for almost 55% of all gold production going back to Roman times in the region. And putting that into context, when Roșia Montană had an 18 million ounce reserve, I think that Blueberry is looking highly prospective for the company. We've released quite a few of the drilling results that were undertaken last year. The final drilling results will be delivered quite soon with a measured and indicated resource, which will be forthcoming in a JORC report. And as mentioned previously, this will be separated. We are only a 29% shareholder, 29.75% shareholder in there. Vast has not actually had to invest any of its own equity in there so far. It's all been done with third-party money, and we will continue to do so and continue with the management contract to take it to fruition in a separate IPO later on this year. So, in summary, the company has now pared itself down to focus on near-term production, to look at external funding arrangements, to regroup and restructure the business to allow a much nearer-term production in income-producing capacity for the company. We anticipate that, and we've mentioned it in RNS on Friday, that we're reporting to what that restructuring actually means to the benefit of shareholders. We believe that the company is going to come out looking a lot cleaner, a lot meaner, and the ability to raise money through debt and equity, but equity from an institutional level in the very near term, and we look forward to bringing that to the market very shortly. Thank you very much. If there are any questions from the room, I'll be happy to take them. I think I've got 2 minutes left. 2 minutes. I've been given 2 fingers. So if there are any questions, please feel free. No questions. Thank you very much, everybody, for your time. If you have any questions and want to talk to us one-on-one, we'll be at stand 58. Thank you very much for your time.